Hi, Chris Jameson here, co-founder SF Lending. Welcome back to Hard Money Academy. Today we're going through Hard Money 205, loan processing. Now, loan processing, at this point you have contracted a property and you're submitting the package to your lender. What you're gonna need to get to the lender is the fully executed contract. This will outline the closing date, the purchase price, earnest money, non-refundable deposit, option period, inspection period, and any kind of special provisions so they know what to look out for up front. You also want to get any kind of assignments of contract. If this is a wholesale deal, it's not a double close or a straight purchase from a listed property, you're going to have an assignment of contract. This is also going to have certain things in it that the lender is going to look for, like the assignment fee. How many assignments are there? If there's multiple, what would be called a daisy chain deal, and there's two or more wholesalers with an assignment of contract, then they've got to be able to source that information as well and make sure that the chain on the deal is clear and concise. You're also going to want to send over your estimated ARV, your detailed rehab bids, including foundation if you have it, and all of the transaction partners on the deal, like title company, insurance agent, things like that. The lender needs list is going to be the loan application you've hopefully already filled out. Credit, they're going to have ran that and have that on file. Your financial statements, be it bank statements, investment accounts, different things like that. Be it your bank statements, your retirement accounts, your investment accounts, your other liquid assets, and any other kind of entity documentation if you're buying in an entity. For an LLC, it would be things that we mentioned before, like your EIN, articles of incorporation, annual meetings, minutes, things like articles of incorporation, annual meeting minutes, and your EIN. And some lenders will also require other documentation like your personal financial statement, tax returns, and schedule of real estate owned. On the property side, your lender is going to require the executed contract, assignments like I mentioned before, your rehab estimates like foundation. If you're sourcing everything out yourself, you're going to need those independent bids like electrical, HVAC, plumbing, roof, or if you're using a GC, just one overall bid for the entire rehab. You're going to want to send property access information so the appraiser can get access to the property if it's on lockbox or blue box or Supra, or it's vacant, or the back door is open, bring a hammer, or coordinating with a certain person, is the property vacant or is it occupied? You're also going to want to send over your title company information and your property insurance agent. And lastly, any kind of realtor or wholesaler that you're working with. Now we'll quickly go through the processing checklist. This is what's going to happen with the flow of the deal through processing once you've submitted everything to your lender. They are going to send a title commitment request to the title company. This is going to inform title that they are the lender on the transaction and they need to start working on obtaining the lender's title policy. They are also going to order the appraisal. This appraisal is done subject to repairs, the bid that you're providing to them. They're going to send that to the appraiser and they are going to appraise the property as if you had fixed it up based on the repairs that you say that you're going to do. They are going to make sure to use adequate comps that are similar to the finish out of the rehab that you provide. So make sure that your expectations are clear up front. If you're going for a flip or retail type property, that you need to have a consistent finish out with the top level comps in the neighborhood. If you're doing a rental property and you don't want to fix it up quite as nice, but just as nice as all the other rental properties in the neighborhood, you want to make sure that you're clear with that up front as well. The appraiser is going to perform a full UR/AR appraisal. What that means is they're not going to do a desktop or a drive-by. You want to make sure that your appraiser actually goes out to the property, most importantly so that they measure it. Oftentimes the county tax record information that lists the square footage is not the actual correct information, is not the actual square footage of the house. The appraiser is going to go out with a tape measure and literally go around the property, any kind of corners, crevices, odd angles, anything like that. They're going to figure that out, calculate the total square footage. Oftentimes this can fluctuate from the county records by 50 to 200 square feet. That's a lot of extra square footage. If you take $100 per square foot and you're off by 200 square feet, That's $20,000 difference in value. That can make a huge difference on your value and your expected numbers out of pocket and your returns on the deal. They're going to request insurance. They need an actual insurance binder and evidence of insurance, not just a hazard policy quote. There's a big difference there. Oftentimes you'll just send a quote over. At least that'll give the lender your agent information, and they can actually request to bind that once everything has been finalized. If the lender requires a survey, which is a personal preference, a strong recommendation of doing, even if your lender does not recommend it, because you can find out things I'll go into a little bit later during underwriting that can affect you positively or negatively on the property with easements and setback lines and things like that. Ultimately, it's the buyer's responsibility, so you can coordinate that through the title company, have the lender request it. If the title company is requiring you to pay for it, you need to arrange that payment with them or pay the survey company directly. Lastly, the lender is going to obtain a flood certificate during this process. That's going to tell you if the property is in a flood zone. If it is in a flood zone, they're going to require flood insurance. Be prepared for that in case it comes up. Now I'll go through all those processing items coming in the door, coming back out from the request to actually receiving it. So once the title company has sent the commitment, the lender is going to review it and verify that the policy is accurate. It's going to make sure that they review it and see if there's any kind of defects on the different schedules. Schedule C would be the most important. I'll get into that in a little bit later. The appraisal has been received. The lender is going to look at it, make sure that the comps are good and that your rehab scope of work matches up with the comps. It's going to make sure, the lender is going to make sure that the comps are in close proximity and they're not past a certain amount of time, like 6 months in the past. Going back to proximity, the lender is going to check the proximity of the comps. Are they across a major intersection or a highway? Are they in the same subdivision? Are the styles of the houses the same? They're going to look at the dates that the house has sold. Has it been recent? Is it 3 months, 6 months, 9 months, 12 months? You get better and more accurate information the more recent the sale is. They're going to receive the insurance and make sure that the insurance policy matches with their requirements. They're going to receive the survey at this point as well. They're going to make sure that the legal description on the survey matches the title commitment. They're going to check the boundaries, encroachments, easements, and setback lines. And then finally, they'll submit the file from processing to underwriting, where they will do a more thorough review of the property and the borrower. That concludes Hard Money 205 loan processing. This is Chris Jameson, SF Lending, your hard money lender for life.